It's that time again. Welcome to Tesla Shorts Time, episode 550. I'm Patrick in Vancouver. Today is July 23rd, 2026. Plenty going on in EV land. Let's get to it. Heavy spending on AI, robots, and robotaxis is squeezing Tesla's profits even as revenue climbs to a record. Tesla reported record revenue and 25% delivery growth in the quarter. Operating profit still declined as costs rose from production delays on the Cybercab, Semi, and Megapack programs, plus continued AI and robotics investment. Battery pack capacity remains the main near-term limiter on vehicle output, according to the earnings update. The company continues to bet that the same spending will eventually expand margins once the new programs scale. While the capital allocation debate plays out at the company level, customers are already voting with their wallets on one key software offering. Over 55% of North American Q2 deliveries included an FSD subscription. Tesla reported record attach rates at delivery and record net new subscriptions in the same period. Version 14.3.6 introduces adjustable speed profiles with a more conservative default behavior. Early user feedback highlights smoother responses and human-like maneuvers during testing. The V14 series continues the rapid iteration path from V12 through V13. Listeners tracking FSD unsupervised will watch whether later iterations loosen the conservative settings once more real-world data arrives. Strong supervised adoption is feeding data into the next phase of autonomy, where the dedicated robotaxi fleet is already running newer code. A dedicated Cybercab assembly line is now visible at Giga Texas after the Model S and X lines were decommissioned. A subset of those purpose-built vehicles is already testing FSD version 15. Musk stated during post-earnings discussion that internal ride demand is sufficient to skip partnerships with Uber or Waymo. This keeps the business model fully inside Tesla's control and data loop. Regulators in the 7 current metros will determine how quickly that internal demand can scale. The setup directly addresses the open question of how quickly purpose-built robotaxi volume can ramp once regulatory approval arrives. The same software path now has a concrete timeline for another vehicle program. The Tesla Semi remains on track for volume production this year at the new Nevada factory. Musk told investors unsupervised capability for the Semi should arrive by early 2027 once the robotaxi stack matures. Autonomy is now the clearer gate versus hardware readiness. Fleet customers will watch whether the shared software path accelerates or delays commercial deployments. The timeline update directly addresses the tracked Semi program where hardware production and software readiness have been the two parallel open questions. Energy storage is also scaling hardware quickly, though margins tell a different story. Tesla reported its strongest quarter yet for Megapack and Powerwall deployments in EEMAE, supported by the Shanghai Megafactory ramp. Energy storage gross margins fell 19% due to higher input costs and ramp expenses. The company is still on track to start Megapack 3 and Megablock production at the new Texas Megafactory later this year. Investors will monitor whether the new factory's scale reverses the margin pressure in coming quarters. Manufacturing preparation is also advancing on the robotics side. Tesla named TSMC, Samsung, and Micron as key Optimus partners for compute, memory, and packaging. First-generation production lines are now under construction at Fremont after the Model S and X assembly was decommissioned. Early Optimus units will stay internal for training data collection ahead of the 2027 volume target. This partnership list gives the first concrete view of the supply chain behind the 2027 volume target. All of these hardware programs ultimately rest on the same expanding compute foundation. Tesla more than doubled on-site AI training compute in Texas during the first half of 2026. Cortex-2 is now supporting both vehicle and humanoid autonomy development and will continue to ramp through year-end. The company acquired an AI hardware firm for $1.95 billion in stock to bolster semiconductor capabilities. The deal closed in the second quarter through an asset purchase paid in common stock and equity awards. The target remains unnamed, but reports point to semiconductor design or packaging capabilities that could support AI-5 and Dojo roadmaps. The move adds in-house capacity at a time when training and inference compute are the main constraints on both FSD and Optimus timelines. Cortex-2 already supports vehicle and humanoid autonomy development, following the first half doubling of on-site Texas compute. The increase comes alongside progress on the Austin semiconductor fab. The supercharger network added more than 2,400 net new stalls in the first half. The network grew 17% year over year, while the company continues to open sites to non-Tesla vehicles. Utilization data from the expanded network will help determine whether open access improves or dilutes per stall economics. Expansion remains a supporting piece of both vehicle and future robotaxi operations. The addition continues the steady build-out tracked in prior quarters. FSD Supervised was credited with saving lives in a new Tesla post that highlighted real-world interventions preventing collisions. The post comes as attach rates hit record levels in North America. It underscores the safety case the company is building while regulators evaluate unsupervised operation. The message aligns with the broader supervised FSD safety report shared in the same period. A Chinese influencer called FSD version 14 badass after a US test drive in a Model Y with HW4 hardware. Chen Zhen compared the latest build favorably to Chinese competitors after testing a Model Y with HW4 hardware. He highlighted human-like maneuvers such as backing up at a red light for a wide-turning truck and precise windshield wiper behavior. The shift in tone from his earlier lukewarm V13 assessment shows how quickly the supervised stack is closing perceived gaps. Both Mad Max and Sloth speed profiles delivered the noted results during the FIFA World Cup trip test. Powerwall 3P is now available in Germany for three-phase homes as a single-unit solution. The offering meets local electrical requirements that previously needed multiple systems and expands the addressable market for residential storage paired with solar. Early uptake will test whether the simplified offering lifts attach rates in a key European market. The launch follows the tracked Tesla Energy program, where residential and utility products have both seen recent geographic expansion. Tesla Semi remains on track for volume production this year at the new Nevada factory, even as broader capital spending faces scrutiny. Fleet customers are still waiting for the first unsupervised capable units. The timeline now hinges on software readiness rather than hardware alone. The Nevada facility addition keeps the Semi program moving forward on the hardware side, while the new FSD timeline supplies the software milestone. Now, one thing worth watching. Tesla warned that costs climbed after production delays on Cybercab, Semi, and Megapack. Operating profit dropped even though revenue reached a record and deliveries rose 25%. The company is betting that the same AI and robotics programs driving the spending will eventually expand margins, but near-term cash flow remains under pressure. Battery pack capacity expansion was again cited as the main near-term limiter on vehicle output. Scaling three distinct hardware programs at once forces trade-offs that single product companies never face. Tesla is simultaneously ramping vehicle production, building a purpose-built robotaxi fleet, and installing Optimus lines inside the same capital envelope. Each program carries its own learning curve on yield, supplier qualification, and regulatory approval, yet they all draw from the same pool of engineering hours and cash. Battery pack capacity is already identified as the binding constraint on near-term vehicle output, so every additional dollar directed toward AI inference silicon or humanoid actuators directly competes with that expansion. The shared constraints create sequencing risk, where a delay in one area can starve resources from the others. Investors are therefore paying for optionality rather than near-term margin expansion. Whether the bet pays off depends less on any single program's technical success and more on whether Tesla can sequence the 3 ramps without exhausting cash or talent in the interim. Keep an eye on the Texas Megafactory ramp for any early signals on energy margin recovery. That's your Tesla news for today. TSLA closed at $374.01, down $4.92, 1.3%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Models and Agents, your daily briefing on AI models and agents. Find every show free at naranetwork.com. Live dashboards, TSLA, SpaceX launches, the investing scoreboard are all at naranetwork.com/data. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.